All right, my friends, TurboTax for 2019 returns. We're going to go through this. It's pretty simple to do here. We'll do a couple of tutorials. One where we have Roth conversions, one where we have married filing jointly, one where we're self-employed. But right now we're just doing Jane Schmo, all right? And she was born in 1960, so she's 59 years old. Has one job, pretty simple stuff here, and let's go into it. I think you'll enjoy this. So again, you go to TurboTax. If you haven't got a TurboTax, you just create a user ID and password. You know, freaking Jane Schmo password, janesthebest.com, whatever you want to do. All right, and then the very next thing, this is for brand spanking new people on TurboTax. It's going to give you a bunch of boxes. Are you married? Own a home? Did you have a baby? Did you move? Are you self-employed? Just click on the boxes, whatever it is appropriate for you. And then it'll say, okay, this is what you should do. And just click it, just follow it. And when you do that, it's going to take you right here. All right, hold on just a second. It'll take you right to this page of your personal info. And you want to hit, so what's going to happen is you got to hit your personal info to start editing it. And it is literally that simple. And you can see I've already got some info in here. So personal info is going to say, what's your social? This is not our social. I just made that one up. What's our birthday? At 1160. We are a worker. We live in California. And now look, you can do whatever you want. You're not paying anything until you file. That's what makes this great. So don't kill yourself with this. Don't make a mountain out of a molehill. Just do it the best you can, and then just get something in there so you got a gauge of what you're going to get back or what you're going to owe. Oh, by the way, if you click on TurboTax through my link in the show notes below, I get paid. Frank, I can't remember how much paid. I probably get a couple bucks every time someone buys it. I think last year I made all of 51 bucks, but I'll take it. 50 bucks is 50 bucks. So if you are going to buy TurboTax, do me a solid and buy it through my link. All right. All right. So personal info, we got Jane Schmo. She's single, and you can see this little edit button. You can change whatever you want. You want to change her. If you want to play around, you can do whatever you want. All right, I mean, just all kinds of stuff in here, which is what I like. Can someone else claim you as a dependent, i.e. my daughter, Maddie? When she fills out, she'd have to say yes there. And when she does, TurboTax will guide her through. And you can just, you see how that works. So basically, we're going to save down here. We're going to hit continue. All right, so that's our personal info. Jane's single. She's 59 years old, and she works in California. This is where she lives, 1310 Morris Road, Alpharetta, California. All right, she has no other state income, and that's literally is that simple. You hit continue, and again, you can do all this without paying for it. That's what's important here. All right, so then it'll say right here, should you want the max, defend, and restore, or do you want the TurboTax Deluxe? And you say, no, don't add max. Just click on that. You're not paying for anything yet. And just click on that. All right, so in this case, we have Jane. She's making $50,000 as a W-2. Notice it's not a 1099. It's just a W-2 on, she gets paid from an employer. All right, so you hit edit add. Again, just edit add. Or it'll say review if you haven't done it yet for this year. Just click on review. Same thing as edit add. You'll see Heritage Wealth Planning. All right, so you see how much federal taxes withheld. I'm literally just making stuff up here. I'm saying that's our employer ID right there. Just made that up. We got Heritage Wealth Planning, U.S. address. You can see all that. Then we scroll down. She made $50,000 of wages. She had $5,000 of federal tax withheld. You'll see this in your W-2, by the way. I literally, because I'm just making this up, there is no W-2. She had $50,000 Social Security wages. 6.2 is what was withheld for Social Security, and she had $50,000 of Medicare wages. 1.45 is what was held with Medicare. Pretty simple. You just go down here. Literally take your W-2 and put it in here. Whatever it says, just line item by line item. You don't have to make anything else up. Just follow exactly what your W-2 says. And then we got state and local taxes. We said, look, she had $50,000 of income for the state of California. She had $1,500 withheld. All right, and so that's it. And then you hit continue. It's literally that simple. I mean, just follow what your W-2 says. And it says, look, we're on track to get $655 of income back from the feds and another $57 from the state. We're like, yeah, that's great. We'll take it. Again, she made $50,000 of income. Let's get the employer state ID, and you have to go in there and put it in. Right now, we're just messing around. State ID for feds are usually 5-4. I think they've also changed them now to 7-5 if memory serves, but either way. State employer ID will have two numbers followed by a dash. So 5-4, 1, 2, 3, 4. It might be 7-5 now. So I think they ran out of 5-4 numbers, kind of like a Social Security number. And then hit OK. Let's review your Medicare tax. I had her being withheld 1.45. And then you say, do you have any of these uncommon situations? And you say, no. I say none of the above. And you can look, if some of them do, click on it for sure. You hit continue. All right, so here we got $50,000. We withheld $55,000. Here's your W-2 info, and you're like, yep, that's it. All right, now watch this. So let's just say, oh man, I forgot. It wasn't $50,000. I actually had, I don't know, $40,000. Just go back to edit and say I had $40,000, not $50,000. And here I want to say $40,000. And what I love about TurboTax, it'll change it right up here. Watch this, because we had too much withheld, and you'll start seeing I get $1,800 back. So that extra $10,000 that I did not make saved me $1,200 in taxes, which shows you I'm in the 12% tax bracket. All right, so that's pretty cool, and we'll just keep it at $40,000 for the time being. All right, so we hit continue. That's fine. And then we're gonna have to do wages for California. Change California wages to it. I'm just playing around with it. You can figure this out. It's easy. Just take your time. No big deal. Nothing's happening until you actually hit the file thing. So why does it keep doing that? No big deal. Just take your time. Follow what your W-2 says. Input it just as per what your W-2 says. Hit none of the above, and watch my California tax will change to. Let's see. Yep, that looks good. It looks good. And my California refund should change, or did it already? I guess it already did change. All right, cool. All right, so did it already change? I can't remember. Anyway, either way. So we have literally, that's it. That's literally it. I mean, if there's nothing else in there, you hit deductions, which we'll do here. And we don't have a home. So we have mortgage interest. Well, we don't have any mortgage interest because we don't have a home. Property taxes. We don't have property taxes because we don't have a home. Income tax paid. We already showed you how much tax we have paid. So let's go to edit and show you what we're talking about. This income, we have paid $91.53 because that includes Social Security as well as your income tax as well. And none of these other apply to me. So we hit no. And it's literally that's that simple. Man. We paid $5,000 to the feds, $3,000 to or $5,000 to the feds, $1,500 to the state, and about $3,000 or so in Social Security taxes, plus a little bit of Medicare. Not too shabby, right? Now let's say we did have mortgage interest. Say you did own a home, and we have, in this case, we'll say, I don't know. Let's see, what's it asking? We say we had home loans in 2019, and we'll say lender name. We'll say Pentagon Pen Fed. And I don't even know if I think they need all this stuff. And we'll say none of these apply. It's not self-financing, basically rent to buy, and no one else co-owns this loan. We'll just say I had $8,000 of mortgage. Let's say $10,000 of mortgage interest. And that's it. And we're just going to hit continue, see what happens there. It says when do we have to take the mortgage out. So you can see it'll guide you through what you need to do. All right. So we just hit continue, see what happens next. And it should, there it goes. So we had, $10,000 of mortgage interest only saved us $1,200 in tax because we are in a 12% tax bracket. You see what I'm saying? So the mortgage interest doesn't save us that much money at all. I'm telling you, everyone says, you get all kinds of savings. So nope, you're not. I'm just telling you because you're only in a 12% tax bracket. It's not saving that much money. And just follow what it says. Nope. Secured by a property mine. It's secured by our house. This is the original. This is the original I used to buy the home. Just follow what they're saying here, and you can see our refund goes up a little bit, and then it'll ask for property taxes. So we're going to say property tax right here, and we're going to say on the property tax, where is the property tax line item? I missed it right there. Real estate property tax. We'll say $5,000. Won't be that in California, but just for simplicity, we'll save that. Should change this. So property taxes and mortgage interest, it saved us $1,500 in federal refund. All right, cool. So we're done. We're done with that. It's that simple. Deductions and credits. I'm telling you, man, that's why I love more TurboTax because you can mess around with it before you actually file to see what your we're not married filing separately. We're gonna hit no. You can just play around with it before you actually have to file, which I like. All right, so now I want to show you something, though. All right, so wrap up tax breaks, and then they'll let you go to California, and you are literally done. And they're going to say, no, you didn't donate to charity. It might be something you want to do, but they're going to say take your itemized deductions because you have mortgage interest, real estate taxes, and you have your other income taxes as well. So they're going to allow you um, to use the itemizations as opposed to standard deduction. Now, if you didn't own that home stuff, you'd only use a standard deduction. So let's go back and not own the home, and I'll show you what I'm talking about. We're going to say we don't have this right here. We don't have any homes. We don't own a home. All right, so let's go down here. We're going to say, oops, that's the wrong one. Hold on a second. We're going to go back to deductions and credits. Excuse me. We're going to go back to deductions and credits, and we're going to say property tax is 0 because we're going to say in this case, again, we did not own a home. And hold on a second. Boing. Oh, we got to go back to, all right, hold on a second, man. Hold on a second here. We're going to go back to here. This is what I love to. It's just so like intuitive. Right there, edit, add, boink. And then we're going to look over at Pablo and say, Pablo, what are you doing? Pablo's my dog. All right, he's always getting in trouble. Always getting in trouble, that dog. That's why we love him. Say no mortgage interest, and we're going to say no property tax. So remember, mortgage interest and property tax are in one line here in terms of TurboTax. And you'll see our refund's $1,800 because we don't have mortgage interest or property taxes. So let's keep going. We're going to hit done here. And then we're going to say nope, and we're going to be done with all this stuff. And it's going to say, do we have standard deduction or itemized deductions? And here it's going to say standard deduction because our itemized deductions are only minimal in terms of taxes that we've paid, state income taxes and and I'm missing something. But anyway, so in this case, a standard deduction. If you have a standard deduction, it is literally the simplest thing to do. All right, so we go to state. We are done with the feds. We go to state, boink, and we're going to get $1,800 back from the feds, $657 from California. Now I want to show you something though. All right, so we got California refund, and I mean it's just I'll let you mess around with that. So need to make electronic payment, but I want to show you though. Watch this. What if we do a Roth conversion? All right, what a Roth conversion is, so in this case, Jane is 59 years old, well, actually 60 years old today or the other day. And she's like, man, I'm getting ready to retire, but I don't want to take all this IRA money into retirement. I want to do a Roth conversion. So what we're going to do is we're going to hit other income, all right, and we're going to say $50,000 Roth conversion. Good boy, Pablo. So we're going to say we have a right there, IRA withdrawal, pension plan IRA withdrawal. Watch this. And we're going to say we're going to hit edit there. And we're going to say she has $50,000 of a gross distribution, of which $50,000 is taxable, all right, because it's a Roth. Now there will be a line item down here later on to say we're going to say no taxes were withheld. So watch this guy change right there. All right, so it went from getting roughly $2,000 back to owing $8,200. Does that make sense? So watch what happens now. So we also got to make sure. And just follow what it says here. But I want to show you something. Were you a public safety officer? No. And if you were, you click that. Yes, I took the money out before 59.5. We're just going to say that for simplicity. All right, now she's 60 now, but we're going to say she took it out before 59.5. Was a distribution from a qualified plan? We're going to say yes, it was. And then it's going to ask you, what did you do with the money? I converted it to a Roth. All right, I converted it to a Roth. You can always say I did something. I did something else and I cashed out. Let's see what that does because we did before. I guess because now Jane is 60, it might not tell us that. Let's see, it might not show us a penalty. Yeah, okay. But either way, you want to make sure you check that converted to a Roth. Let's go back to Jane's info and show her being born in 1963 because that means she's under 59 or 1963. She's under 59.5. Let's see what that does to this right here. Because it should give her 10% penalty on that conversion. Let's see. It might already be in there. Hold on just a second. So we're going to go here. Don't add max. I want to go to income right there. All right. So we're going to hit edit for her Roth conversion. Right there. Looks good. Normal distribution. Looks good. And what we're going to do is we're going to say a premature early distribution except Roth. Because remember, we're saying she did not put it into a Roth. She just took it out. And you got to get these numbers right when you're taking distributions from your IRA. That should change right. Yeah, there we go. So it added another 10% of $5,000 of taxes because of the early penalty. You see what I'm saying? So that's important. So you got to make sure that we do normal distribution right there. Well, I guess you can say normal distribution. I wonder what. Hold on, I want to get early distribution set for Roth. Bear with me just a second. I wonder what happens here if we say that she did do a Roth. Okay, hold on a second. I want to see what happened. Public safety officer. Should be this. I did something. Okay, right here. I moved the money to another account. I converted to a Roth. Let's see what happens. That should drop a little bit. Yeah, okay, there we go. So she saved the 10% penalty because she did convert it. So there you go. And then, I mean, you literally hit review. And you, it's literally this simple right here. You finish your California taxes. You are done. You are done. And then you can hit file. And then, let's see, there's a place in here to see the 1040 as well. Ready to file tools. And we want to see your 1040 print center maybe. Let's see, hold on a second. Preview this year's tax return. Yeah, pay later. We're just going to pay later. So you can see your 1040. They did it last year. We shall see. All right, we're ready to file. Anyway, I'm not going to get all that here right now. But was it that? I didn't think it was that hard to do. Review. Anyway, mess around with it, but I could have sworn it's under tools, topic, or maybe it's under print center, where you can actually see your return before you actually filed it. It must be here. Print, save, or this year's return, pay later. Hold on, I want they change it. We got to delete, finish California. All right, so maybe we got to go through California if we can do that. All right, done with state. Maybe that's what we got to do. All right, let's finish California now. Did I already do all this? Continue. Okay. No. Okay, gotcha. We got to do no. All right, so California's asking a bunch of questions here, so we'll just go through this real quick. All right, boink. We're just gonna say, look, California, done with adjustments. There you go. No, we're gonna say no. Oh yeah, California. Whew. And Georgia's quick and easy. Done, and done. All right, done with credits. No, we're not donating to anything specifically to California. No. All right, it's done with other tax situations. All right, let's see. Let's check it over. Okay, so they don't have a couple forms here. All right, so let's just see. I see. That's why it's not ready for us to look at. They don't have a couple forms. All right, we file federal and state together. All right, let's see if it done with state. Let's see what happens here. All right, ready soon. All right, continue. Let's see what's going on here. We don't want that. I just want to see the well done. Okay, all info saved. Well, I guess I don't have all the forms quite yet ready for us, so we can't do it yet. So anyway, you can see what's going on here. So, but you can look at your 1040 before it's ready to file. I know at least you could last year. I imagine you could this year as well. So anyway, that's there you go. There's a rundown which shows you the difference between doing a Roth conversion and not. That increased Jane's taxes from $10,000 on $50,000 Roth conversion. So that's a 20, well, actually 10,000 in the state of California, increased her taxes by $15,000. I mean, that's a 30% tax bracket increase for Jane because she no longer is in the 12% tax bracket. She is now in the 22% tax bracket, and on top of that, California taxes jumped up quite a bit as well. So for her to do a Roth conversion, I don't see how that makes any sense at all, because $50,000 Roth on $40,000 of income doubles her income, which means it puts her tax bracket at 30%. It's a 30% hit to do a Roth conversion. So hope you find this informative. Don't forget to click in the show notes for the link to TurboTax. Share this video, like it, and we'll see you next time. Thanks now.